Hey guys, welcome to this week's stock market recap. I'm Robert Montes with Link Financial Advisory. This is where we cover what helped the market, what hurt the market, and your key takeaways for last week, which was June 13th through 20th, 2025. So last week, what helped the market? Well, let's first of all back up with a recap. It was pretty much a break even for all major indices here in the United States. Whether it's the S&P, the Dow, the Nasdaq, all of them were up or down fractions of a percentage. We're talking between about 0.15 to 0.25%, so pretty much break even. What helped the market last week was earlier in the week, there were some escalated tensions between Iran and Israel, and then those kind of decreased. I'm now recording this after Operation Midnight Hammer, I believe it was called. So I know that has escalated again. But as of last week, there were signs that was cooling off, and that did help bolster performance in the market. We also saw the Federal Reserve last week, Wednesday, basically announced that they're going to keep rates at around 4.25 to 4.5%. So no change there. I think this is the second, maybe I'm getting that wrong, but there's been multiple times here that they've talked about just maintaining rates. I think this is the second time in a row that they've done that. However, they are projecting 2 rate cuts here in 2025. So that would definitely continue to help the market as far as expansion there. What hurt the market? Again, it was still, like I said earlier in last week, and that has since come back, was escalated tensions between Iran and Israel. There's still talks about the tariffs, and obviously China and the United States trying to get all that figured out. But those were kind of the big things. I mean, then there are very big things. As far as looking forward, I'm recording this, like I said, after the US strike on Iran. What I would say is now is the time to really pay attention to your allocation. Make sure that you understand why you own what you're owning. I think where people really start to panic is when they don't understand why they even own what they have. And then when the market's moving up or down, it causes them to worry that they're doing the wrong things. If you're using a passive strategy, it might be time to talk to an advisor about using an actively managed strategy. Historically speaking, passive tends to do better when the market's up. Active tends to do when the market is down. I don't know what's going to happen as far as this strike between the United States and Iran. What I do know is that it makes sense to have someone paying attention to what's happening with your finances. If you would like a second opinion or just like to see what's going on, please feel free to reach out. We are great at helping people mitigate unnecessary risk and working with them to make sure they have a strategy that is in line with their goals. Until next week, guys, we'll look forward to it. I'm sure it's going to be an interesting week. Thank you so much. Take care.